My man Herbie has spoken, just got interviewed on CNBC. This is an oil tanker stock that I've owned and I've talked about for so long on my YouTube channel. You can check out my previous videos. Let's hear what he has to say about the uncertainty regarding oil tanker stocks.
We are seeing in the energy markets right now. How sustained do you think it could potentially be, and what it's going to mean for your business?
Let me tell you that I'm sitting here now in Norway, and I have two flags from Ukraine and two flags from America behind my back. The energy market is disruptive. There are dislocations. We have been in the Baltic Sea many times, carrying oil from the port of Primorsk. Now we have left that. But the thing is that the energy markets and the tanker business in which we are, they're very sensitive to changes and uncertainty. And uncertainty often, ironically, may be good for tanker markets. But we are now up against a very serious situation involving Ukraine and involving Russia. And we have supported America always, which we continue to do, and we now support Ukraine.
So basically, he mumbles through the rest of the interview. I think it was, maybe a little bit embarrassing. Basically, all I got out from it was that he loves oil, he loves Russia, and he loves Ukraine. The stock is listed on the New York Stock Exchange, so I mean, he has to love America, and that he's partnered with America. And he repeats saying that he has two flags from Ukraine and two flags from America, and that is who he supports, and that is what NAT supports. And I'm glad to hear that as a shareholder of NAT. But I mean, on the other hand, it wasn't a very, I think, intelligent interview. I think my man Herbie needs to potentially resign soon. But one thing he did say was that uncertainty can be good for the oil tanker markets, and we're going to unpack that statement. I can link this down below, this video interview down, but basically, this is on YouTube. Uncertainty may be good for the tanker markets. NAT founder. I actually requested to interview him a while ago, but he didn't respond to my email. I'm not surprised. But anyways, let's jump right into it. I actually made a video 2 days ago before the NAT price jumped by, I mean, it's up by 26% today, just based off of this uncertainty, talking about why I'm bullish on the oil tanker market for 2022. They also reported, NAT reported Q4 results, which were a lot better than previous years. And I mean, there's other people going on to say that tankers tipped as 2022's best buy. And a lot of these beaten down kind of dog-like stocks like NAT, like, I mean, okay, let's look at the 1 year chart. It's down the most ever in 1 year. Like, it was just $1.40 like a couple of weeks ago. And all of a sudden it's getting a lot of love. My average price was about like $4 or $5, so I'm not selling out anytime soon, and I think that it can go a lot higher. It just depends on what happens in the near to long term. Of course, the longer that this conflict continues, the more that the rates are going to be pushed up, and we're going to be talking about all these factors here. But I mean, look at the long-term trend of NAT here. If we go on even 5 years, we can see a spiked up. This was during the pandemic when basically everything got shut down. There were such a surplus of oils that there was just floating storage of tankers. Basically, tankers filling up with oil because there were no space to store the oil on land. And so rates shot up. And we're seeing a similar situation, but this time it's because of a conflict, an exogenous source coming in and increasing the tanker rates. So let's explore that a little bit. So here, number one, global oil tanker rates jolt higher on high fuel prices, risk premiums. So let's just talk about oil tankers are soaring globally as traders scramble to cope with jitters over possible disruption in Russian supplies. So there are a lot of sanctions directly happening to Russia. However, Russia at the same time is a major exporter of oil, of crude oil, and this is sending, and there's potentially oil from Russia is not going to flow out anymore. So Russia will turn off the taps, and Europe basically gets most of its oil from Russia. So that's a huge source of uncertainty there through pipelines. So as you can imagine, you shut off those pipelines, and now Europe will need to get oil from elsewhere, and they will need to transport it, i.e. ship it, instead of it going through pipes, which could also increase rates of oil tankers, because it's not going through pipes anymore. It's being shipped from the States or from UAE, United Arab Emirates, to Europe. So, that's a pretty big deal. Risk premiums are also going up because some ships have been downed by Russian military, which we'll look at later. But yeah, so look at this. Costs of oil are going above $100. The global energy sector is concerned what Europe and the US may impose sanctions on Russian exports and severely disrupt supplies. I know that my country, Canada, they recently banned Russia from importing oil into Canada, but that was largely symbolic because Canada isn't a major importer of Russian oil anyways. Fuel tanker rates from the US to Europe jumped more than 8% on Thursday, surging to their highest level since May 2020 during the pandemic. The cost of bunkering fuel at the world's largest bunkering hub jumped 6%. Whoa, okay. So again, this is huge. And if we zoom in on this one right here, so Suezmax oil tanker, this is specifically what NAT operates in. They just have Suezmax oil tankers. Look what happened during the pandemic. We're nowhere near that, but we're, sitting nice at a $79,000 here. Aframax oil tanker even shot up even more here. I believe this is in hundreds of thousands of dollars, but we'll actually have to see. I'm not positive. I think it's around $41,000 as the average tanker rates. Clean fuel tanker. So there's VLCC oil tanker, which carries 2 million barrels of crude. Suezmax only carries 1 million. Aframax only carries 500,000 barrels of crude. And across the Mediterranean, all slowly coming up. So this is looking good for oil tanker markets. And I mean, patience is rewarding. I said that wrong, but basically what I'm trying to say is if you're patient, you will get rewarded. But again, there's also this is another one. Tanker rates have spiked as fighting broke out. Aframax and Suezmax rates jumped more than fourfold this week, pushing earnings to around $170,000 a day. Average Aframax, this is the 500,000 barrels of crude, were 11,000 a day to over 68,000 a day, with average Suezmax earnings going from 4,000 to 41,000. It's interesting to see how even though Aframax carries half as much as a Suezmax, they're earning more, $68,000 a day. But yeah, look at that, more than quadrupling this week. The next few weeks will continue to be marred by uncertainty, and rates will likely remain elevated and volatile, especially in the Baltic and Black Sea regions. However, once the impact of the sanctions is clear, the markets will settle down, and this is kind of what I'm seeing as long term. Things will settle down, but for the short term, and especially going into Q2 and Q3 maybe of NAT's earnings, we can see a spike in the potential price of NAT where you could cash on some shares, and I'll go over my price target, but later on in this video. So you can see a percent of global seaborne exports in 2021. Russia held the major one if you're looking at crude at 8%. Ukraine was just a little bit here, and Russian fleet percent of global. Owned tanker fleet 2.4%. LNG fleet 2.1%. So yeah, like this is pretty interesting. They are a major player in the crude oil shipping business, and we'll see, because so many countries are imposing sanctions, that is basically going to take away so many tankers, 2.4% globally, offline. And what that does is that limits the supply of tankers and pushes the price up for tanker freights tremendously. So this is pretty interesting situation we have going on here. Another exogenous pressure that could push tanker rates even higher. So yeah, we'll have to look out for how this is impacting NAT and the global shipping routes. On top of that, not only, of course, are tankers being tipped as 2020's best buy, but 2 more ships hit in the Black Sea. So another 2 ships have been hit by missiles in the Black Sea. So 1 chemical tanker and the Panama-flagged bulk carrier Nemora Queen. So what basically is the result of this is that insurance costs for these tankers are going to go up, which is not necessarily a good thing for impacting the bottom line of the top line of NAT's business, like the net income, because they're going to have to pay more insurance, but at the same time, they're going to offset those costs by also increasing the cost to ship oil. Ooh, so I mean, like this is, there's so many factors at play. It's not just like a simple solution when you're looking at oil tankers. As we've learned during the pandemic, at one point, NAT price, I mean, okay, let's just go to, went from like, let's look at the 5-year chart here. So yeah, it was sitting at like $2, kind of sitting to where it's similar at right now at like $2. It jumped by 148% to $6.12, and then proceeded to fall back down pretty swiftly, 76%, and now it's shooting up. It's shot up by already 68% basically since its lows. And I do believe, now let's go into the price prediction here. So this huge shock kind of was very limited by an event that occurred, so this was from March to May. This initial price increase was going on from, so like April, May, like, basically less than 2 months. So if you apply the same sort of time frame, although this conflict may last a lot longer, so many things are uncertain that it's hard to say. But what I'm trying to, I guess, get at is if this conflict lasts longer than a month or two, this could severely impact freight tanker rates, and they could more than quadruple again, as we've seen during the pandemic, which has happened to the tanker freight rates. Especially as oil, and this is a very different situation. So as soon as all that oil got kind of liquidated, there was a lot of free tankers, and that's why the tanker price went down. So I think what we'll see here is potentially a huge spike. I mean, again, I think it depends how long the conflict lasts, how long the sanctions last, but I think we could see NAT coming to levels that we haven't seen in over a year, where they potentially reach $6 or $7. And I think my price target for the short term, maybe in the next month or two, would probably be, $4 to $5 if everything goes the way that I'm predicting it to go. But again, we'll have to see. I am not. This is not financial advice. I do own shares of NAT, also as a disclosure. Do your own due diligence before buying and selling. But I do think that the oil tankers could be a pretty good way to play 2022. So be sure to check out my previous videos on NAT. This is what I started my YouTube channel on. I'm happy to be going back to it, but I do want to try to divest away from oil tankers into more ESG type companies such as windmill, solar, etc. So yeah, I hope you enjoy this video and the candid nature of it. I'd appreciate a thumbs up, and let me know if you have any comments down below. And peace, guys. Love you all, and feel free to check out my Discord. It's totally free. Also linked down below. And if you want to support me, feel free to check out my Patreon, my full-time buys and sells in real time. So yeah, peace, guys. Love you all, and see you in the next one.